For several weeks, the market has been threatening to crack, but the dip buyers kept providing steady support. Traders have been struggling with the market recently, rooting for weakness in order to clear the air and get some better setups and entry points. Is this just the first big crack in the market that will lead to some sustained downside, or is this just a quick purge that underinvested bulls will meet with aggressive buying? Joining me from the floor of the CME is Larry Shover, CIO of SFG Alternatives. Larry, give us a look into the action we're seeing today.
Well, what I'm seeing today is just really a lack of liquidity, a lack of volume. The numbers were cross current. All of a sudden, people are starting to worry about tapering. That's something that's been in the news for a long, long time. I mean, in short, I think people are tired. This rally was not really momentum driven, and we're seeing some just healthy profit taking right now.
Right, and I happen to agree with you. Same thing on the tapering subject. Does anyone really think that the Fed is going to aggressively just stop doing that? And if in fact that's the case, as economic data improves, that is a better sign for the market overall. But the question that we're getting from traders today is the activity that we're seeing in the VIX. So we're at about 14.5 on the VIX right now, but we're seeing it's kind of expensive to buy the August 13 contracts and even the September.
Yeah, no, exactly. And when you look at implied volatilities right now, of course, we're going to see a little bit of a jump, but really a lot of that is skew driven. The price people are willing to pay for out of the money puts versus calls. That has steepened about from the 33rd percentile up to about the 50th percentile just as of this morning. But that should be expected given that we've just crossed through a couple key support areas in the S&P 500.
So what's the trade here? Is it a good time to get all in the market? Is it a better time to hedge, or just sit back and let August play out?
I think I'd let it play out, but still, I would buy the VIX. I mean, why not buy it? It's still really cheap over history. If you're fully into the equity market, why not? I mean, the gains from here on out are not going to be as easy as they were the last 6 months. It's going to be a lot of rotations within groups. I would look at cyclicals versus defensive long term. But that said, I would definitely hedge with the VIX or downside protection. It's still relatively cheap.
Excellent. And again, agreement in there as well. 2013 has certainly been the stock picker market. Thank you, Larry Shover of SFG Alternatives.
For more of Jill Malandrino's plays for trading spikes in market activity, visit optionsprofits.com.